Hello, welcome back. I'm Brigitte and I'm here to talk about finances, how they can be a blessing to you, your family, the body of Christ, and all of humanity when they are managed properly. And we've been talking about financial basics, and I'm going to continue on in that vein. And I'm going to take as a reference of scripture, Matthew 25, 24 and 25. It's basically the story of a fella who's been given the responsibility of managing finances, and driven from what's really fear, he takes the money and he buries it in the ground, and then he gives it back to the person who originally gave him the responsibility and says, "Here you go, I'm giving you back what you gave me." And the person is not happy because they said, "Hey, the least you could have done is gone out into the financial industry and gotten me some interest on this." And so let's think about that concept for a minute. You know, there was a time, and many people still do, is they keep their money and they put it under the mattress, or they bury it somewhere, or hide it in the freezer, or your little hideout spot. But many people don't have an account. And if you're serious about becoming financially stable, then you might want to really consider opening an account at a financial institution. Now, that can be a bank, that can be something online, that could be a credit union, but having an account somewhere other than at home somewhere. The reality is, if you have your money basically at home, somebody can break in and they could steal it. You could lose it. If you have a shredding machine, you can have it stuck in an envelope and shred something through, shred your money. You could hide it somewhere and hide it so well, you cannot even find it. And so you're not really protected. Well, if you put your money in a financial institution, and let me grab my eraser here. There's a federal agency called the Federal Deposit Insurance Company, FDIC. And part of what they do is they provide an insurance. So when you go to a financial institution and you open up an account, your account is automatically insured. You don't have to sign up for it or fill out any papers or anything. It's automatically insured up to $250,000. So if there's loss or fraud, or even if in a worst case scenario, if the financial institution, bank, credit union, if they go out of business, your money is still insured. And so there's more of a safety net there. And often if you open some kind of an account with a financial institution, it's like the first baby step to moving on to maybe getting credit cards, or auto loans, or a mortgage on a house, something like that. So it's the first step, because you're establishing a relationship with a financial institution, and they should have a good reputation. They should be considered reliable and stable. And in a sense, some of that transfers to you, because you're moving to financial stability. You want to be seen as stable and be seen as responsible. The other thing is, when you don't have some kind of an account at a financial institution, you're going to have to pay some fees, because like it or not, the way our system is set up, particularly here in the United States, but not only here, globally, it's almost an assumption, excuse me, it's almost an assumption that you do have an account with a financial institution. And so there are certain things that need to be accomplished, like even paying bills, getting loans. It's just kind of an assumption. I'm not saying it's right or wrong. I'm just saying it is what it is. And so with that, if, for instance, you're working and you are getting a paycheck, right? Either you're going to have if you have an account, you can have that automatically deposited. If you don't have an account, automatically deposit it for free. That's important. If you don't have that, you're going to have to go to a check cash. And they're going to charge you a fee. Now, it depends, right, on how much that paycheck is. But say there are two of you. That means you're going to have to pay for two separate checks. And that adds up over time. It starts to add up. And remember what I said. Now, once you have that bank account, you can start building up your credit. Because you have a relationship with the bank, they can see that you have money coming in. They can see you have a paycheck, a means of paying this loan back, and you may begin to build up your credit. And we'll talk later about things like sometimes if you just have poor credit and you're trying to rebuild it, you know, if your grandmama and them put their light bill in your name when you were 3 years old, you know how it goes. And now your credit is kind of messed up. There are ways to build that, but let's just start with, you can begin to build a credit card up, or you could maybe, you know, try to get an auto loan. Now, if you don't have some kind of an account with a financial institution, it's going to be a little bit hard for you. And so, you know, you may be getting involved with buy here, pay here, and this has to do with like furniture places, automobiles. Almost always these are going to be higher interest rates. They're going to be higher. You're going to pay more. Now, you notice the pattern here. I'm saying you'll pay more. You'll pay more. You have less money. You may be broke, but you're paying more money. Also, you may do things like payday loans. You know, if emergency, something happens, and you may find yourself doing a payday loan. Okay? That's all fine and good. You're doing a payday loan, but you know what? It's going to cost you. It is going to cost you. And so, an account can actually save you money. I know what you're saying. I know, because there's been all kind of statistics, all kind of surveys done on why people don't want to open an account, and the top one is almost always fees. Because you saying to yourself, fees, and I'll put another one, minimums. And so you're saying, I know what you're saying. I know what you're saying about the payday loans, but when I tried to go to a financial institution, they charged me a bunch of fees too. And they said I had to have a minimum amount. If I didn't have at least $500, they charged me another fee. That's true. But that might have been the good old days. But now there's something called Google and the internet, and you can go online and you Google and you search for financial institutions that have little or no fees and that have few minimums. So it may be something like $20 to $100 to open an account, and you want something where they don't have huge fees, like maybe you have to keep in $10. I think some credit union, something like that. You keep 10, open it for $20, $25, and keep $10 in there. Otherwise, you won't have fees, or very, very limited fees. But there are some that actually have no fees. And that's what you want to look for. You want to go and get an account so that you can begin to establish yourself financially. And that's whether you are just getting out of college and just getting your first check, or if you're 60 years old and you're tired of being tired and looking at your finances and they are not doing anything and not growing. You don't have to do like this gentleman in Matthew 25 and live in fear and do nothing and keep hiding money and keep doing the same thing and never getting anywhere. Now, when you go and you begin to open an account, they're going to ask you for some basic information, some identification, maybe a passport, something with your name on it. They're trying to get your name. They are going to ask you maybe what's your birth date, an address. And just keep in mind, These are questions that they're asking everybody. These are very, very basic questions. A social security number. And they may ask you the purpose, like, why are you opening this account? Again, it's not because they're trying to be nosy and get in your business. They basically just want to know what you're going to do with it. I'm just going to, deposit some my payroll checks, and I'm going to write some bills. That's it. That's all they basically want to know is the purpose of this. And remember, financial institutions are required to get this information from everybody. Whether you are female, whether you are a person of color, they are not profiling you. This is just required information that you give once you open that account. And then maybe every few months or every few years they may say, hey, has anything changed? They may also ask for your phone number. Now, this does a couple of things. It helps them to know who they're dealing with, to get an idea of what's going to be going in and out of the account. But it also helps them to market to you a little bit. So if they may send you a few things and say, hey, we're having some special deals on auto loans. Hey, we have a special credit card deal. Hey, we've got some brand new savings accounts that you may be interested in. What you're doing again would be building a relationship with that institution so that you can build financial stability and get on your journey to financial freedom. And so these are just basic types of information. Don't sweat it. Don't get upset about it. It's just some basic information, and you provide it to them. And it's up to you. If you don't want any marketing, you don't want to hear from them, that is certainly up to you. But remember, the goal is you want to establish a relationship. Let me give you some statistics now. Because you may be saying, I don't know, I still don't know if I want to open an account. I'm doing okay with keeping my money in my pocket. I'll figure it out. Well, a survey, I think a recent survey by the FDIC and also CFPB, and they talk about unbanked, or people who really don't do a lot of business with financial institutions, credit unions, banks, that kind of thing. They do say mostly cash. Would it surprise you that people who have an account are much more likely to save money? Yeah. If you have an account, you're more likely to save money. Why? Well, first of all, you're not paying all those fees. You're not paying a much, much higher interest, which, by the way, I think it was the CFPB, and that's another government agency, that said payday loans cost some as high as 400% APR, right? So, and that means that's interest and all the fees that are maybe combined in there. That's expensive. And if you're already struggling, it's becoming more expensive. It's almost like a tax for being poor. So, here's my thought. Even if you're afraid, and let's be honest, sometimes that's why we don't do things, because we're scared. We're scared to go in the bank. We're scared to go talk to people. We just haven't done it before. Go online and do it. However you do it, just do it. Get somebody to go with you. But break the pattern. If in your family, nobody ever really does anything with banks, financial institutions, credit unions, we just always keep it in our pocket. Consider something different. At least go Google it. At least pray over it. At least think about it. And then if you can gather up the strength, pray God to strengthen you and go and do it. So this time next week, if this appeals to you, if it makes sense to you, if you don't feel like giving away money when you don't have to give away money, by this time next week, have it done. Don't talk about it, don't nothing. pray, get some peace, get up and go and do it. Real simple. And next time, we'll go to another basic. All right, God bless you, and I really hope this helped. Bye now.